Hi, this is Dave Aquino with Value Charts, and here is the free video for Monday, December 14th, 2015. So just looking at Amazon the other day on the 60-minute chart, and from the standpoint of how we write credit spreads, I saw a lot of interesting examples of how to look at the charts in a way that you can determine these are good areas to sell credit spreads. So if you can see here on the daily chart, what we actually have is a number of weeks in which Amazon has stayed below basically the 685 level. And then also above the 655 level. Now this sideways channel, and you can see the flatness of the 8-day moving average here on the blue line, it actually provides some opportunity to sell credit spreads because we've been in the channel for 5 weeks. I mean, not 5 weeks. This looks more like 3 weeks, but over the course of 5 weeks, we've been moving back and forth just with one little dip below that. So looking at that, you want to be able to sell a credit spread. Now, when it's non-directional like this, you're a little worried, okay? But because it may just pop up against you and then go back down. So we're just looking at the hourly chart. We have opportunities to see, based on our MQ pivot points, these areas of in which the price level lines up right on existing MQ pivot points. So here we go, going back about a week and a half. Do you see how we have pivot points that line up right around 680? This point here, this point here, here, and here. Here we have a little bit of a move higher on the second, but that's okay. That's close enough. That's 685. So that actually defines the high. And then on the bottom side, how many days do we have pivot points that end up between 663 and 660? 1, 2, 3, 4. Now this pivot didn't count because it's too close, but you do have a double pivot there. And then you have this swing through, broke below it yesterday, and then it's rebounding a little bit today. So 680 is a good level. By paying attention to the pivots, we can identify areas of high probability that the price will not go. Now, what's interesting is you say, okay, that's good, Dave, but how do I know which one's bullish and which one's bearish? I would pay attention to the daily chart, gauge the momentum, and it looks like Amazon is below the 8 EMA and that we are slowly pulling down, okay? Increasing downside momentum. So I would look to sell credit spreads above it as a bearish call credit spread, and I would either go for 680 or 685, one of those strike prices. Now if this price action breaks below 660 again and the momentum picks up to the downside, not only would I just go ahead and reach out, sell a credit spread, you can do it at 680, or you can divide the 680 and the 660 levels in half. So you have 670 and sell the credit spread there. Now that's a more aggressive trade, but that's actually one way to trade a breakout move to the downside. And you can also pop on a couple of puts here as Amazon starts to move lower. My thinking is if Amazon does break lower, the next level of support is really 625, currently the 50-day EMA. All right, good luck, and see you in the trading room.